In today's video, a trade breakdown here on the 4-hour and 50-minute time frame using supply and demand and market structure confluences. Let's dive straight in. So looking at this price action that we can see over here on our chart, what I just want to do is draw pretty much everything in. So we can see the market is bullish. Over here, we've had our 4-hour BOS in towards the highs. And now if we focus on the market structure of the candlesticks themselves, we've had a bearish change of character here on the 4-hour time frame by breaking the low of this bullish candle. So the bearish candle over here broke the low of this bullish candle. So now you see the market is pulling back in towards pretty much this area of supply, which broke this change of character low. And the market could potentially head down lower in towards the downside. So why am I saying that the market could potentially move down lower in towards the downside despite the market overall being bullish from this low in towards this high? Well, there are two reasons for that. That is pretty much actually confluence point number 2. Over here we have our area of demand, and confluence point number 4, we have our premium versus discount. So pretty much the two rules that we always expect is before a major reversal or continuation in towards the upside, we expect either this area of demand to get hit or at least that 50% retracement mark to also get hit. Then in addition to that, because of the bearish change of character, I expect that the 4-hour has the potential to then continue back down lower in towards the downside. Then when it comes to liquidity, this is an obvious area of support and resistance. We get the bullish candle over here, so it's very likely that people who trade support and resistance have now gone long with their stop loss below that area of support. So what I'm now actually looking for is for that low, or for the lows to get liquidated, for demand to get hit, and for the 50% retracement, also known as the PVD, also to get hit. So that is pretty much now my 4-hour bias explained. So we understand we're looking for further downside from the market. Now let's go in towards the 50-minute time frame and identify our potential trades. All right, so we're here on the 50-minute time frame, and on the 50-minute we can see that we were bullish but are now flipped bearish. So over here we had a break of structure into towards the upside. We can clearly see that we had a clear trend in towards the highs. Then what happened? We broke the low, which broke this high over here, and we saw close below it, meaning that the overall 50-minute trend has now shifted bearish. We've now pulled back up in towards the upside, in towards this area of supply over here. We also pretty much have this extreme area of supply over here. And we're now actually looking for that downside continuation after seeing a sufficient retracement in towards the highs. Because remember, if we use the PVD tool, we can now see that we've at least seen a retracement back up in towards that 50% mark. We've seen a retracement in towards supply. The overall market trend is bearish in towards the downside. So there's a lot of confluence now for the market to head down lower. However, one of the most important pieces of confluence is now that we see a market trend shift in towards the downside. So what I would like to see is an initial reaction to this area of supply, kind of like a mini pullback, continuation, and then an overall trend shift to occur so that we can go short within this market. So we see the market starts to pull back after that initial reaction. So we never just randomly want to start shorting on the very first bearish candle. No, we want to wait for the overall market trend to shift in our direction so that we can trade together and in line with it. So over here on the 50-minute time frame, we can see that the overall internal trend was bullish in towards the highs. So now what I'm waiting for is for that overall trend to shift bearish to then look for that downside continuation. So for now, what I'm looking for is actually a break of this low over here. So I can then trade with the overall continuation further in towards the downside. So what we then do is that we press play. We see, okay, the market continues actually to react to this area of demand, which we had over here, this overall area of consolidation. And from there, it continues further in towards the highs, pretty much in towards the extreme of this overall bearish swing leg, which ranges from this high all the way down in towards this low over here. But what we can see is that every single time now that the highs are getting broken, the retracement is far more rapid. So what happened is over here, we get a break of structure and we see clear impulse in towards the highs. So there's still a lot of bullish momentum within the market. Then over here, we get the pullback, we get the break of structure, but then straight away retracement in towards the downside, indicating that the overall bullish momentum is starting to weaken. Now, if we look at what's now happened, we can clearly see, okay, we had an internal break of structure again in towards the upside, excuse me. So we get the push up, push down, push up, push down, push up, boom, break. So over here, we now have our break of structure internally. So this internal trend has now also shifted bearish. So exactly what we just drew out has now occurred. So what I'm now looking for is that entry model over here by shorting on this area of supply in line with that overall 50-minute swing trend in towards the downside to trade towards that 4-hour target, which is down below over here. What I now do is I'm going to be entering on that area of supply, which is now being formed through that break of structure in towards the downside. So the initial short that I'm now ready to take is based over here. We set our entry on that area of supply, we put our stop loss above the highs, and what we want to be doing is we want to be targeting the lows itself of that entire bearish structure over here for around a 1 to 2.5. So we place the order and we're going to be doing a sell limit. We place the order and then we wait to get tagged in. So we see the initial push in towards the downside happen. We see that pullback in towards our entry point, and from there we see that downside continuation occur in towards the downside. Before, first of all, pulling back in towards this supply once again, and then again you see supply do its thing. You can see that the overall trend is simply playing out in towards the downside. So you get the first push down, pullback, push down, pullback, back in towards that supply, and we're now just looking to trade with the trend and continue in towards the downside. And then eventually what we see is that the market starts to consolidate, doesn't really move, and then eventually hits our TP.